We're going to look at a trade setup in SPX. These are January 5th expiration cycle, 60 days away. We're going to look for an Iron Condor base trade setup. So what we're looking for is a bear call spread and a bull put spread that are currently trading between 80 and 90 cents mid price. So we looked at this last week on Friday, but just to refresh, we're going to look at a 26.85, 26.95 bear call spread currently trading for about 80 cents. And we are looking at 24.65, this is 24.70, 24.60 bull put spread currently trading for about 90 cents. So we're getting about 80 cents on the call side, 90 cents on the put side. That gives us net credit for this trade of about $1.70. That is the most we could possibly make on this trade. So that's our reward. Our risk is $8.30. So this trade will require about $830 of margin per one Iron Condor. We're going to look to make adjustments when either a short call or a short put is going to reach a delta of 20 on the upside and 25 on the downside. 26.85 is currently about a delta 11. So when it gets to about a delta 20, we're going to look to make an adjustment to this trade, and we're going to look to remove between 1/2 of maybe 2/3 of our net delta exposure. On the upside, that adjustment point will come at around 26.25. If we get there, we're looking at a net delta exposure about -25, maybe -30 delta. So we're going to need to pick up about 15, maybe 18 deltas at that point. So we have about 35 points of room to the upside. And on the downside, our first adjustment point is going to be right around 25.40. So at 25.40, this Iron Condor is going to be about 15 delta long. So we're going to look to cut half of that. So we're probably going to look to pick up 7 or 8 delta put on the downside to remove our half net delta exposure. Anywhere or anything between that, we don't need to do anything. We're just going to monitor for those two price levels, 25.40 on the downside, 26.25, 26.30 on the upside. This trade has 60 days to expiration. Our first profit target is going to be half of our credit, which is $1.70 in the first 30 days. So if this Iron Condor could be bought to close for about 90 cent debit in the first 30 days, that's a good exit. So that will be my first profit target. My max loss on this trade would be about 1.25, maybe 1.5 times that net credit. So the most I could possibly make on this trade is $1.70. I don't want to lose more than $2.50 per one Iron Condor on this trade. But before I hit my max allowable loss, which if I don't make any adjustments at all, my loss on this trade comes somewhere about 26.80 on the upside and about 24.50 on the downside. But before I get there, I'm looking to make an adjustment when 26.85 call goes from 11 to 20 delta, or 24.70 put goes from 16 to -25 delta.